Hey, this is Chris Trapani, the Mortgage Pro. I'm sitting here with my trusty dog, Hope. It's a perfect name for what we all need to have right now with this COVID-19 virus going around, and I'm locked in my house with my wife, and my dining room has suddenly become my office. And people are calling me all the time. Hey, Chris, what's the market going to do? What's going to happen? Well, look, if anybody tells you they know what's going to happen in the real estate market, they have a crystal ball, because nobody could be sure. But here's what I do know. There's still a shortage of supply, and there's still a big demand. And when we learned in 8th grade, supply and demand, prices do go up. What's going to happen as far as the economy? I really can't tell you. But I will tell you what's going to happen in the loan business. What's happening is there's going to be a tightening of credit. And what happens when that goes on in the mortgage industry is it makes it a little harder to get a loan. Now, let me give you a perfect example. Back in the 2000s, what happened? Well, we all know that it was too easy to get a loan, and that created a meltdown. Well, it was so easy if you were breathing, and my dog here, she's hungry. And what happened was it was so easy to get a loan. If you were breathing, you got a loan. And the pendulum shifted to, hey, it became too hard to get a loan for a number of years. And the economy's been rocking, everything's been good, and they eased up on the guidelines. But now we're going to get a little tougher again. And I'm already getting emails from some of the lenders where right now, as an example, on an FHA loan, 57% debt ratio. That means take all your monthly debt payments, not utilities, debt payments, and add it to a house payment. And if it's under 57%, well, more than likely you're going to be able to qualify for the loan. Well, they're going to be bringing that debt ratio down to probably 50, maybe even in the 40s. That's one. Number two, they're going to make the guidelines a little bit tougher as far as credit scores. You know, they're not going to really be happy with a 580 credit score, or they're going to be raising the rates tremendously with the low credit scores. So we need to look at this as a whole, and what's going to happen is you're going to have a little bit of a harder time qualifying to buy a house. Now, I know there's people out there with an 800 FICO score and tons of income and a very low debt ratio. This message really isn't for you. You can buy a house with no problem. But for those of you who are kind of on the edge, and should I do this? Well, it's only going to get tougher. So if you're on that edge, we do know that prices are still moving slightly upward. You might want to make that move now before it gets harder. So this is Chris Trapani, and I'm offering you hope. And I'm asking you to reach out to me, and I'm happy to help you answer any questions about firing your landlord. Happy to do that. Stay safe out there.